Welcome, ladies and gentlemen, Commodity TV. We are still in Vancouver, and now I have the honor and pleasure to interview Brent Charleton, the CEO of EnWave Corporation, and to give us a short update, of course, about on 2019 and also on the exciting new pharmaceutical deal. Brent, welcome.
Thanks, Jochen. Good to see you.
Yeah, good seeing you. Thank you very much for taking the time. We saw us last time in November, and you just finished your year end, I would say, which is 30th September 2019. And I think the numbers were not quite out, but maybe you can give us a short wrap up now how the year 2019 was for you.
Sure. Well, we felt that fiscal 2019 was a very good year of progress for EnWave. We significantly improved our top line, going from, call it 22 million to north of 40 million, growing both parts of our business, the machine sales and royalty side, as well as the sales of Moon Cheese via NutraDried. So on a top line basis, we did phenomenally well. I think there was some baked in expectation from the shareholder base to be bottom line profitable. Unfortunately, we did not deliver that this year. But however, in 2020, our aspirations are to be at a minimum cash flow break even on the EnWave parent company side and cash flow positive on the NutraDried side. So we're moving in the right direction. Again, we've had very good progress and look forward to talking about some details today.
Fantastic. Okay, then let's say 2019 was a good year for you anyhow, that's no doubt. Probably you also invested a little bit into the business, and this was one of the reasons, maybe, and the slowdown in the cannabis probably, that there was not the final real profit in the balance sheet, but I'm pretty sure you can correct this year. So because I think the first quarter for you, which was the last quarter last year, already started quite well, huh?
Yeah, well, Q1 was, I'll say, a little bit softer than perhaps expected, and that was to do with a bit of a hangover from the Costco Most Valuable Member program that NutraDried participated in, which had huge sales in Q4. That being said, the success of the MVM program has now led to several new opportunities for growth with NutraDried. So for, let's call it year over year, fiscal 20 versus fiscal 19, we do expect, again, robust growth in both top line, as I mentioned, cash flow break even on EnWave side, and hopefully cash flow positive for NutraDried side.
How's the lovely baby Moon Cheese doing? You know, I'm totally addicted to that.
Well, this will be the first month where they're starting to introduce the new packaging. So last time we spoke, we showed you that, the different format sizes, which will play well into multiple different distribution channels, and the introduction of 2 new flavors, the bacon cheddar and the Parmesan garlic, which again, through quantitative market research, have been deemed to be top 3 flavors.
Hope you can bring it still quite fast to Switzerland.
Well,
we don't get it yet.
To be frank, I know we'd love to do that. But NutraDried's focus is on maximizing the runway in North America, the domestic marketplace, which has ample opportunity for growth. And then our partnerships in Europe with Arla Foods and Friesen Campina, those are both progressing very nicely, and we hope to have some good updates on those relationships in the relative near term.
Fantastic, great. That reminds me also on Bonduelle. Is there anything going on?
Yeah, they're still very active commercially selling their Dehydro Frozen branded in flavor products, both business to consumer and business to business. And so the question really is, are they ever going to order a larger scale machine? Like they've already got 120 kilowatt, but their eyes were set on a 400 kilowatt. So that dialogue remains open. However, of course, they lost their exclusivity, and we're going after additional companies to become partners in that space.
Fantastic. So there's also room for positive surprises.
Absolutely. Definitely. We're working on multiple projects, which we hope to convert into tangible commercial progress.
Yeah, fantastic. So then I think that was even this week, you did a deal with GEA Lyophil GmbH. And of course, as I'm German, I know GEA very, very well. It's one of the really old, fantastic, high quality machine, how can I say that? Machine toolery construction companies, controlled by Otto Happel, a German billionaire. And I was quite excited when I saw it, because it looks to me like now you are really entering a side of Merck, the pharmaceutical market. But maybe I'm wrong, but you do not have to invest super large amounts, right?
That's exactly it. And so strategically, when I became CEO, we ratcheted back the exploratory projects that were ongoing in the pharma space, and rather wanted to focus on our, call it, exploratory collaboration with GEA, with the Merck agreement. And so GEA has now completed that due diligence, and they see commercial potential and they know that they have the expertise and background in the space to take what we've already done and hopefully accelerate that path to monetization of the intellectual property. So the purpose of this agreement really is, like you've mentioned, A, reduce the cost of commercialization of our technology in the space, B, leverage an industry leader in GEA Lyophil, and also C, get our technology on the radar of some of the senior executives at GEA in that they are very present in the global food processing industry as well as pharmaceutical.
Okay, so there would be two chains then, pharmaceutical plus food probably. That's the target, I would call it.
Well, right now, our relationship is very, very focused on pharma only. We still control all the cannabis and food commercialization of our technology, but understanding that they're going to be, call it, in bed with our tech for quite some time and get familiar with the value proposition, I can only imagine that they can see potential value for their company in these other verticals in the future.
Yeah, okay, super. Can you maybe say some words how this would work then practically? I mean, do you sell them like a technical license that they can build it? Or do you say, yeah, you know what, you can license our IP, but we still get some money out of every machine or per machine sale? Exactly. If you can say that already, I don't know if it's too early.
We can provide some context to the relationship. So it's a technology transfer license where they can access our full patent portfolio for the development of the current pharmaceutical grade machinery. They would then invest themselves and hopefully leverage some of their IP to take it to the next level and satisfy Merck's needs in terms of capacity, hoping to enable Merck to conduct clinical trials on the vaccines that they're focused on drying using vacuum microwave at this point. In terms of what does that mean for us from a monetary standpoint, we've agreed to take a percentage of net proceeds from the sale of any commercial scale vacuum microwave machines built and sold and serviced by GEA. So again, our standpoint is we're going to take a step back. We're not going to be investing the resources into the manufacture and deployment and servicing. We're merely going to take a royalty based on the amount of machines that GEA can prospectively sell through their global network.
That means you can collect money in the future, but you do not have to bring up an upfront investment on the one hand, and you do not need to have your own manufacturing and servicing.
That's just it.
That's super.
And to be transparent, like internally at EnWave, we don't have the expertise that GEA does in the pharma space. So, why not partner with someone who knows what they're doing and have been doing it for multiple decades?
Yeah, and I think it's a great win-win situation for both companies, of course.
Agreed.
Fantastic. Can you maybe comment a little bit also, let's say, on the outlook for 2020? What else have you planned aside that? How is, for example, the cannabis business going? I mean, was really rough for most of the companies, right? I heard this week at the conference here down in Vancouver that probably the Canadians have more trouble than the US. US are doing better. I don't know. What's your view on that?
So overall, again, we have lofty aspirations for financial performance in fiscal 2020, both facets of our business, but specifically in the cannabis space. It's been challenging over the past few months in navigating our different relationships to ensure that we are getting paid on contract and timing of delivery on machines is reasonable. And I think we've done a really, really good job internally of doing that. We've always collected more cash than we've spent on different deals. So we're not at risk of any prospective write-downs, which is good. And then ultimately, we're looking beyond Canada in terms of the commercialization of REV. We're looking into Australasia, which we now have 2 licenses, one in Australia and one in New Zealand. We have our first license in Switzerland. We are looking to the US market and we're doing our due diligence so we can expeditiously enter, hopefully in the very near term.
Fantastic. Okay, then let's come back to the food chain, I would call it, not the cannabis, let's say overall food dehydration, etc. What's the plan here for 2020?
Well, we have, again, 36 commercial royalty-bearing licenses, and the majority of them are food companies, many of which already have smaller scale equipment where they've taken product to market and are starting to build their businesses to justify CapEx deployment for larger scale machines. And so our focus is on converting many of our existing licensees into large purchase orders this year, as well as signing up new licenses. So if we look back last year, we did, I think, 9 new commercial licenses through Q1 and the early stages of January here in Q2. We've already signed 6 royalty-bearing licenses, as well as the joint development agreement with GEA and a Taloa with our first Mexican company. So good performance in terms of new licenses. Now what's more important over the coming quarters is selling large-scale machines, driving revenue, and ultimately profitability.
Fantastic. I liked it. It was a great final sentence. Brent, thank you very much. Driving revenue and be profitable. I think that's the motto for 2020.
That's the goal.
Super. Thank you very much, Brent.
Thanks.
Great. Yeah, ladies and gentlemen, it was Brent Charleton, the CEO of EnWave. Yeah, and you heard it, driving revenues, driving, of course, finally, profitability. This is the real key thing here. And also you heard it, probably, I really like that they have collected more money in the cannabis sector than they have invested. So there's no risk of write-offs here. I think that's very, very important, because maybe some people thought through the slowdown in cannabis that EnWave might get in trouble. We don't see that here. That's also important. It's good that we have talked about it. But I think the bright future is really the deal with GEA and also with Merck in the backyard on the pharmaceutical side. And I think this is the right step to the right time to enlarge the business and to de-risk further and to bring and to put EnWave on, one more real solid column to stand on. So I suggest you check out the company. Thanks for watching us, and bye-bye from Vancouver.